Okay, let's do a exercise here. We have all the accounts here. I'm going to pass around the worksheet. Take a look at A, B, C, D adjustments there. Those are the adjustments that you will need to make for adjusting entries, adjusting entry column, and adjust to trial balance. If you don't have a copy, raise your hand. Thank you. Okay, for A, B, C, D transactions, you have A here, accrued service revenue, which means, remember, accumulated service revenue, then if it's accumulated, that means you haven't actually collected the cash from customer. Okay, so this is a service revenue, and at the same time, it's an accounts receivable. B, supplies used in operations, $400. It already tells you this is the part that you used up. So meaning adjustments here, if it's something that you used up, you will have to reduce it by $400. Okay, C, to give you a hint here, C, accrued salary expense. Anything that is accrued, accumulated salary expense, and you haven't paid out the cash. So at the same time, this is a liability. D, depreciation. You know, depreciation always comes together hand in hand with accumulated depreciation. Okay, so these are the only 4 adjustments. Try to make it the adjustments amount here. If you need to journalize it first, then journalize it first. If you don't need to, you can just jot down the amount here. So this is just an in-class exercise. I'm not going to collect this back. This is for your practice purposes. Then after adjustments, try to figure out the up-to-date adjusted balance. Okay, and then if you can, try to do income statement and also balance sheet. This entire worksheet, in case you lose it, is also on Blackboard, right? exercising. All right, let's take a look at the adjusting entries here. So before we get to do the entire worksheet, we need to understand what are the ones that need to be adjusted. So this is a problem that readily gave you a table of unadjusted balances, which really is already there in the worksheet. You just need to use that and then add or subtract some of these 4 adjusting entries that need to be made. Okay, so these are 4 adjustments here. We know the dollar amounts, so the question would be, what are the accounts that we need to use? So for accrued service revenue, this is an accumulated service revenue, meaning this is the revenue that you readily earned. You provided service or provided goods to a certain point, and when it reaches the end of the season, we want to recognize the part of revenue that we earned, even though it's not yet cash receipts. Okay, we haven't actually collected cash. This is accounts receivable. We debit accounts receivable, and then we credit service revenue for $2,600. So in your adjustments column, you'll find accounts receivable. On the debit side, put down $2,600. In the credit column, you will find $2,600 credited for service revenue. So this is A adjustments. Okay, I'm going to go over the worksheet a little bit later. I'm going to do the journal entries first. The second entry here, supplies used in operations. So meaning that $400 worth of supplies already has been used up. It's no longer there. So originally we have balanced $1,400, and now we used up $400. This turns into supplies expense. So notice as this problem is telling you the part that's used up, not the remaining balance. So last week there was a question that asked you was giving you the remaining balance, and you go back to trace back what is the part that we used up. Here is directly telling you the part that we reduced. Okay, so that will be $400. And then we reduce assets, supplies, credit, $400. So you'll find under the adjustment column, supplies being reduced $400, supplies expense increased $400. Okay, now tell me the accounts that we need to use for C. What do you have for debit? Salary expense, right? Here we accumulate expense. It's accrued because we haven't paid off the money, so the credit side would be salary payable. Good. So liability account increase is on the credit side. So you'll see salary expense debited $1,700, salary payable, the adjustments credited $1,700. Okay, what about the last one? What did we debit here? Depreciation expense, very good. And then accumulated depreciation, which again is an asset account, but it's a contra asset account. So contra asset has the opposite rule. You will be posting additional value of deduction for furniture's value or deduction for building's value under the right side. But we almost never use the left side. For the most part, accumulated depreciation, you almost always see value on the right side because it goes together with one of the asset account. They're representing reducing furniture's value or reducing building's value. So you will almost never see it, any dollar amount on the left side, unless there was an accounting error that we need to adjust based on the prior transactions that happened. So you will see accumulated depreciation, $4,100, depreciation expense, $4,100. So these are the only 4 adjusting entries that need to be made based on this problem, the information given to you. So if we represent them in a worksheet, summarizing all those adjustments, just copy the dollar amount to its specific category, debit credit side, it would look like this. Okay, so you have adjustments A on accrued service revenue, accounts receivable, service revenue. You have B there representing used up supplies, $400, which we turn into supplies expense. You have C, salary payable accumulated, because employees worked for us, so their salary expense incurred already. Okay, you have D here, depreciation expense, and then accumulated depreciation up there. So each and every transaction, one on the debit side, one on the credit side. Make sure you post them to the right side. Okay, if you have it post them to the wrong side, then you have a double amount error effect for one side. One side will be more than the other. So at the end, total adjustments, debit credit equal to $8,800. Then the adjusted trial balance really is just adding or subtracting the adjustments. So cash account, for example, has no adjustments being made. Remember, all the adjusting entries will have nothing to do with cash because all the adjustments is tied to one of the prior transactions. Okay, so adjustments here, cash will remain the same. Accounts receivable, earlier we had 0. Now we have $2,600. Supplies will be reduced by $400, so now altogether we only have $1,000 worth of supplies. Originally it was $1,400. Okay, equipment, the same amount, just copy. Accumulated depreciation, we have $18,500, and now additional, $4,100. Okay, so you see the original balance of accumulated depreciation on the right side. Now we have an additional amount that we want to represent under this account to bring down the value of long-term asset, because we have been using long-term asset. Okay, accounts payable, same dollar amount. Salary payable, we have adjustments here. Originally was 0, so now we have $1,700 that we owe to employee. Retained earnings, same dollar amount. So retained earnings will not get updated until we do income statement. Okay, so that retained earnings there, $1,500, is not an up-to-date account. All the others are. Retained earnings is an exception here that still has the old balance because we haven't done income statement yet. Okay, common stock the same amount. Service revenue we add additional $2,600. Salary expense we add an additional $1,700. Okay, depreciation, supplies, same as adjusted amount. Okay, so at the end you should be getting to a total debit amount $131,500. Same for the right side. These two should equal to each other. Okay, I'll give you a minute if you need to make adjustments. And then I'll go on to the last two columns. Again, for those of you that came late, midterm will be March 4th. Okay, it will not be next Monday. I pushed it back to a week later. Midterm will be March 4th. I'll be also making an announcement. If you see your friends that didn't come to class today, make sure to pass on the information. This weekend I will make an additional homework. Just move back 2 weeks later's homework to this week. So you will have still a week of homework to do practice. But then when it reaches next week, you don't have homework that's due the following. The weekend before midterm, you don't have homework. But this week, you still have another homework. Okay, I'll be posting it later. Okay, let's move on to the remaining two columns. First one here, I just copied the adjusted trial balance from prior slide. So now we're just doing income statement column, which means we're only representing revenues and expenses here. So just copy revenue and expenses, exactly the same amount, copy to income statement column. But the last part here, remember that we have revenue here, total expenses here. Just for the purpose of bringing up debit to equal credit, we put net income here. Okay, it's obvious that revenue now exceeds expenses, so meaning the company is doing pretty well. There's net income. We already know this for a fact by comparing these two numbers. So when you know there's net income, to bring up the total debit side to equal the credit side, we just put net income information here. So in other words, when you look at a worksheet, if a company has a worksheet, when you look at a worksheet, even though you don't see the $2 amount revenues and expenses, you see $1 amount at the end below the last row. You see it here, that basically represents net income. Okay, if you see a dollar amount here, that represents net loss. Okay, last column for balance sheet column, just copy all the asset accounts, liability account. Revenue expenses, we put it under income statement, so don't worry about revenue expenses for balance sheet. Balance sheet, just by its definition, we only have the permanent accounts, the asset, liability, common stock, and also retained earnings. Okay, but again, the last part here, you do see that net income is included here because, again, we don't have statement of retained earnings column. So retained earnings balance up there, the $1,500 there is a old balance. That's the beginning balance. You need to add the new earnings, and then subtract any dividends, which in this case, we don't have any dividends given out. Okay, so really there's just the old balance of retained earnings and new net income information here. So net income adds to retained earnings. Retained earnings normal balance is the credit side, so that's why it's under the credit side. And again, summarize the information at the end. You will find total debits to equal total credits. So before adding this net income, it doesn't equal to each other, because remember that retained earnings is an old balance. So from income statement, the profit will transfer to statement of retained earnings. Statement of retained earnings will be updated, and you will have the new statement of retained earnings balance for balance sheet. So this is why this is here.
For the balance sheet, the ending, the 44,100, how come it's on the credit side?
Because this is representing the net income, right? So net income increases retained earnings, and then retained earnings, the normal balance, increases on the right side.
Okay.
Remember, equity account. So if equity account expenses, dividends are sort of like exceptions. It lowers down equity amount, net worth of the business. But net income is a good thing. It increases retained earnings. We put it under the right side. Okay? So this is a complete worksheet, the most thorough internal document that a company could have, 5 columns with all the information, and then really for actual statement format, these things just need to be key into the actual statement format. Okay, like income statement form has a heading, has a title, has all the information, which is exactly the same as what's here, just into the format structure, statement structure. Okay, any other questions before I move on to statements? Okay, if you understand the adjustments, you understand the adjusted trial balance, you understand what we're trying to do here, when it reaches statement, it's really easy because all the information, we're just representing it in a format.